All right, ladies and gentlemen, I hope you had a wonderful day. You remember when I used to shoot like this? Well, yeah, I got a video, man. We have a lot to talk about, but if you didn't see it, man, those short squeeze, that silent, not so silent squeeze today. Yeah, we had a very interesting day, and now we have inflation tomorrow, and we got to talk about it because inflation's low. All right, so let me flip the camera. We're going to talk a little bit. Hold on. I even got the bleached Lakers shirt. That's like an earnings staple, but we have a lot to talk about, Chad. I have a very simple breakdown for tomorrow, 1 hour before the bell. That is the official release, but we will be there live. YouTube.com/the stock market. I will be live 15 minutes before the report, and we will have everything live. This was even the last CPI. It was pretty intense, but even though I'm doing all of this and I'm going to be waking up, tomorrow's going to be interesting, and it shouldn't be that crazy. So we have a lot of areas we could start with, but just to give you a simple idea, you could go check this out. Go to your TD Ameritrade, go to the option chain, look at what is being priced in. You see that plus or minus saying about $3.56 for tomorrow's event on the dailies. That is about just under a 1% move. If you compare any of the CPIs last year or the end of last year, we would be pricing in like 1.1 to 1.5. Even at one point, I remember I pointed it out to you, it was like 1% priced in. That was very low. Well, you're doing it again. This CPI is not pricing in that much. Now, we are still going to be there. There is going to be room for surprises. And now this is all you got to understand. So I'm going to dive into the CPI. I still have a couple of plays that I want to go over today, but this has been one of the main themes beyond the small caps this week. I don't think the data should do much, and I really think earnings season is going to be a lot bigger. Now, we had an interesting move in the market. We'll see how that plays out tomorrow, but thankfully, we only want to look out for a couple of things. Now, this is the title of the video. I don't know if you're aware of this or not, but tomorrow, headline inflation is expected to drop to 3.1%. That is the consensus, and that's a very low number. And just think about it. If that comes in lower than expected, we just had the Manheim used car index also decline, and a lot of things decline, and even Chinese deflation. But overall, if this comes in lower than expected, we may even see 2%, a two-handle on inflation. So that will be a very big deal, but the market's already near highs. This is already expected and priced in. It's been like this since the beginning of the week. Why is it like this? This all has to do with the baseline effects. Not only has everybody been talking about inflation coming down in general, and we've seen evidence of that, but don't forget, you're on a year-over-year basis. We are comparing where inflation is compared to last year, and around this time last year, inflation was going crazy, so that's why the rate of change is expected to be at 3%. Does not mean prices are down to 3%. No, I mean you see what you, anyway, that's on you. You figure it out, but I hope you get what I'm saying. And now tomorrow holds a lot of implications. So all we're looking for, maybe I don't want to mess it up. Maybe I'm biased. Maybe I'm downplaying the event, but I'm not really expecting too much. With the number already drastically so low and even 1% lower than the last CPI that we got, I think the market is already expecting this. And the only way we get a surprise is if the core number drops below 5% by a big margin, or we see like the low twos. That would be way better than expected, and that could fuel some of the upside. That's what I see to the upside. On the downside, unless this thing like absolutely rockets up to some of the numbers we saw last year, I don't even think a upside print should shock us. The only thing that'll be shocking will be if core shoots back up to like 5.5, even higher, because core is really close to breaking down and or breaking out. So here are the two charts. This is just looking at normal inflation, and this is what I'm trying to tell you. The rate of change year over year. It's not saying your overall inflation. Pretty much the reports we're getting are a rate of change. it is now dropping at one of the lower paces. Inflation is slowing down. This is pretty much going to bring you back to the rate of change you were seeing last in 2021. This is why this level is important. But I mean, part of the market going up, this upside we've seen in the market, I mean, you should already be aware that this headline inflation has been going down. Most of it, or you should be feeling it through your gas prices like a lot of the data. But this is what I was saying about core here, because this thing now tomorrow, this is that sweet spot of like 5% or that 5.3 that we have not been able to break this whole year. If we break that, the last time we even like broke above it, you instantly magneted up like 2%. I mean, pretty much if we do begin to go down and fall into the previous year's pace, we would start to see core quickly fall below 4. That's why this is such a big deal. But as far as tomorrow, we're pretty much going to expect it to come a little bit below this line. I don't think it's going to drop too much, but like I'm saying, based on how it played out, if it does, that would be the real bullish surprise. But if this turns up and just bounces off here and goes back up, kind of like the data we saw in Europe a couple of weeks ago, and that's actually very relevant, then that's where we start to go down. But then the question is, how much further is it going to bring you down? And then that's us talking about the range. And that's why I'm saying the earnings will be the most important. So that's what we're looking for tomorrow. Even today, I mean, we woke up to China's stimulus news. That's what kind of lifted us up. We even have the business optimism index. That was like the highest point in 6 months. But today was all about the small caps. It's putting us at a higher point coming into the CPI. But even myself, the guy who tells you the stock market is crazy every week, I think most of this CPI should be expected. And with how big some of these numbers are expected to go down tomorrow, it's really going to have to be like off of the expectations to surprise us. Otherwise, we are now really getting into earnings mode. We're watching this small cap squeeze. And I could even argue maybe it is all just the earnings run up and setup. So we will see what happens. But let us get into the plays. So I hope you're ready for CPI tomorrow. That's going to be fun. Again, I will see you on stream. Now, as far as the plays, again, we have a lot of these plays in the long term that have squeezed, or at least Redfin. That's been a good one. I haven't made any of these plays. I was talking about it. If you've been following along, we played like all of these. I mean, except for Roku, we got Redfin in the long term, but like Overstock, we just flipped that. That was part of it today. I think Roku, like I just said, we didn't play that, but like Lucid, I mean, you could really just go down the list. A lot of plays we brought up, even Coinbase, just they went crazy today. The silent squeeze really wasn't that silent. So I don't have any other plays in there besides anything kind of working for us already. Maybe I got that other Cody play, but I am going to keep an eye out for them. But then one of the plays that I made today, I actually grabbed a buyout. So it was AVTA. I grabbed 100 shares at 25.20. And why I think it's an interesting play and why I'm bringing it up as the first play is because we saw a lot of buyout news or activity. And even today, the Activision deal that came out. So we were talking about it. I think the price is like 93 or 95. You got to figure that out. But I believe it closes in about a week or so. So keep your eyes out for any of these plays because we were hearing, I think even VMware, we got to hear, I think from the DOJ or something like that, but you're getting updates on theirs. AVTA, it was just a buyout rumor, made a play for 100 shares, thought I'd flip it, but I think it brings up the broader point of like some of these bigger buyouts. We're coming towards the completion date and you heard a lot of these court cases play out, so keep that down as your first play. That is play number 1. Then play number 2. I'm actually really excited about this, and I think it has to do with this earnings thing. Pepsi will be reporting, but don't watch Pepsi. Keep in mind that effect we saw on food companies a couple of weeks ago. Watch all the other food plays, and even related to this rotation, again, watching small caps, this back and forth with tech stocks and even the Dow. I think Pepsi earnings is going to have a way bigger, broader effect on other names. So Coca-Cola, that could be a sympathy we're going to see in the morning, but I think throughout the whole day, we might watch a baby rotation caused by an earnings, but that also depends on how big it is. If it really Pepsi comes out with either a major miss or a major beat, if it's kind of in line, it may be too calm, but then again, that could spur some confidence in a lot of the other sympathy plays. So watch out for Pepsi. That is play number 2. And then finally, Play number 3. We have an old play. I cut one of the futures at the beginning of the year with like one of the bond plays. I still held on to YCL, the yen. He is not over, and actually I think he's at an interesting play. So we made another future play on the yen. I think it was like right around the last Powell or so that we got, but I would watch the Japanese yen. I think, one, it's a pseudo bond play. Relate, 6J, YCL. It's like IEF. Again, the correlation is very, very tight, especially there's been some pretty crazy moves recently, but the news today on Japan, I was tripping out in the morning. There was a headline that apparently Japanese people are spending money again for the first time. Prices are going up and they're actually paying for it. And it's like the first sign of life of inflation in Japan. And there was a couple of other things over the last couple of days with their economic data, but all in all, if that is true and that does happen, that's like a gigantic generational shift. But even monetarily, even related to the play, everybody would think that that would lead to the end of this crazy policy. And if you do watch Japan start to get good enough to the point where they could tighten up, I mean, that could bring back a lot of the strength that the yen once possessed. It'll be interesting considering it would get its strength back once they experience inflation for the first time. If you know, it's kind of weird, but we're going to see how that plays out. I still got to play on that, so going to be watching out for that. And that one, just keep an eye out for it. Like I said, it's a borderline pseudo bond play, so I do think earnings will probably be the driver over the next couple of weeks. So depending on the outside news or how things play out, or even earnings scares, maybe that'll start to get a bid with bonds or not, but it's already made some big moves recently. But besides that, I closed out of ROIV. I'm still holding on to like AGIL. These were the IBD, irritable bowel disease. Again, ROIV, they got takeover interest again. Even the play I made today, AVTA, I guess I'm kind of leaning towards a certain type of play, but there was just that. Still holding the Disney there. I think even Disney had news about like spinning off their India unit. They had like a bad India unit, but going to be watching that. The bank earnings too, I have no plays on it besides the long term. Going to see if this silent squeeze keeps continuing. Otherwise, we get our data tomorrow, we get the earnings, and then before you know it, man, we're really about to find out some either confirmation or more hype for the rest of the year. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I'm so hyped to tell you what I'm about to tell you. And I want you to know I'm praying for you, okay? I don't know if you know you had somebody praying for you out there. I only had my mom praying for me, man, growing up. Ain't nobody ever. So I'm praying for you, man. I don't know who you are, and that's literally my prayer tonight. I said, I'm going to say, Lord, for the person I don't know who it was, but watched it and really actually, I say, I bless them, man. Give them the guidance and the knowledge they need. Maybe some mental fortitude. I'm here, like, you know what I'm saying? To stay in the game in the long term, please, for the temp. But no, for real, man, let's go. Keep your head in the game. Everybody is rooting for you. I mean, nowadays on the internet, maybe it's a little weird, but at least that's what we're doing here. And that's why I'm saying get the long term, but stay in the game. We've already seen a lot. Whether you want to put it in high or slow gear, we still have more months, and it all takes time. So we got to get through it, Chad. But I love you. God bless you. Drink that water. Stay hydrated, healthy. That's it. I'm going to see you bright and early tomorrow. That's it. Get the rest. You better get the rest. Good workout, anything. You know what I'm saying? All right, I'm leaving. That's it. That's not. It's hype. It's not awkward now. It's hype. I guess second half, first half was awkward. Now it's just hype. I can't end it like that, can I? They're going to think I'm insane. Horn.